Trading Group, July 29th. Sometimes it's better to be lucky than good. Came into the day today with, again, another focus on Beyond Meat because they were due to report earnings today after the close, which they did, and they actually beat earnings. But then the company came out with some news of a secondary offering where they're going to be selling 3.25 million shares to raise some cash for the company, and the stock took a hit. Now, it's not a bad move by the company, I mean, at all, really. It's 3.25 million shares, not a huge number. And, the company and the CEO just taking advantage of this ridiculous run that the stock has had and this overinflated market cap. And they're taking advantage of it to raise some cash. And, with the growth that this company has seen, the partnerships that they're creating, like you just recently had, Blue Apron, you had Dunkin' Donuts, and I'm sure you're going to hear a lot more partnerships between this company and some other food providers and restaurants and whatnot. But, they're going to need a lot of cash to keep up with that demand, keep up with that growth. They're going to, keep up with marketing. They might need to, maybe build another plant or something somewhere. I mean, plant meaning like factory, not like plant-based meat. But today I got lucky on this one, guys. I took some put options going into the close before the earnings print. I bought the $220 strike puts that expire on Friday, August 2nd. And now here we are trading after the close. We're down at 193. All right, so I will be up a nice chunk of change on these options. But this morning, I missed this huge move to the downside this morning. I mean, this happened way faster than I was expecting. Originally this morning, I was thinking that we were going to gap down and then have like a push up and try to go green. And I thought Beyond Meat was going to maybe do something like this. And then I was going to look to start to get some put options here in front of that all-time high and then see if we roll back over and then report earnings. But we didn't really get green, and then we rolled over, and this thing absolutely collapsed. I mean, I'm talking we went from 234 all the way down to 201. That has a $33 drop, okay, in Beyond Meat. And then that got everybody saying, that's it, this is the crack, this is the break, the stock's done. And then what does it do? It rallies it right back in your face. So after this wild morning, huge sell-off, huge rally. Okay, we rallied this thing all the way back up to 229 from 2. So we dropped $33 and then rallied back $28. Okay, just a huge move in the morning. And I think that just got everybody kind of like worried because then the stock did nothing for the whole rest of the afternoon, just traded sideways. Because I think that was kind of like the shell shock, and this got everybody gun shy. This bounce back got everybody gun shy. And we just waited until the earnings print. The earnings print came out and the stock barely moved. This was actually, without this public offering, you could have had traders on both sides of this trade. Traders that bought calls and traders that bought puts and traders that did a straddle. Everybody could have lost money on this trade. Everybody. The implied move or the expected move based on how the options were trading was about $42 a share. Meaning the market was expecting the stock to move $42 a share in either direction, either up or down, whichever direction it goes after the earnings announcement, they're expecting it to move $42. Okay, well, after the earnings was announced, it did not move $42. It basically did nothing. Okay, right at the earnings print, you had a quick pop, we had a quick pullback, another bounce back. And we were just trading right around where we closed. We were just trading right in here, right where we closed. And I'm saying to myself, wow, this is crazy because the implied volatility, these contracts were so expensive. So expensive. Implied volatility affects the price of an option contract. The more volatile a stock is, the higher the implied volatility will be. The higher that is, the higher the cost of that option contract is going to be. Implied volatility usually increases as you get close to a major catalyst or an event like earnings. Once earnings are over with, implied volatility drops off big time. That drop off in implied volatility will reduce the extrinsic value of the option contract, which reduces the price of that contract. Okay? So if this stock did not really make a big move one way or the other, there was so much implied volatility factored into these contracts that it's possible that if you got a call or you bought a put, you could have lost money on this trade. And that's kind of what we were looking at right off the earnings print. Okay, and then you had the news of the offering, and that finally took the stock down and gave the stock direction. And that's now we're trading here 193. If we get below 192, I think Beyond Meat sees 180. I think tomorrow you get further action to the downside on Beyond Meat. I'm looking for the low 180s as my target. As I take you guys to a 15-minute chart, I'll show you where I come up with this number from. Okay, here is your 192. You guys can see this is a 15-minute chart. You can see this nice little area of support, okay, at 192. That's the area that we are holding support right now after the close. Not surprised to see us find support here. But if we get below 192, there's not a lot of room. There's not a lot of structure until you get down, okay, below 180. Okay, you can see in here, not a lot of structure here, just this day on the 22nd where we just ripped. There was not a lot of stock traded in this $10 window. Okay, from 180 to 190, had a very small amount of stock trade. Okay, you don't see structure there. As I pan this out, you guys can see the difference. Like, this is structure. Okay, you see all this stock that gets traded in here. That's why I'm thinking if we get below 192, we could see a quick pull-in that could take us down below $180 a share. Okay, so do we get down there tomorrow? Maybe. Maybe this is an option trade that I hold until Wednesday or Thursday, depending on the momentum to the downside. Because if this thing can get down into here, my strike price on my options is 220. So if we get down to 180, that's a nice big gain. Okay, that's a really nice gain. I just took this trade, guys, just as a lotto play. Okay, it's very rare that I buy a stock or short a stock or buy options going into earnings because it really is a coin flip. There's no way that you can tell. There's no way anyone could have told that Beyond Meat was going to come out with an offering. There's no way that you can ever forecast or anticipate what earnings are going to be. It's totally a coin flip. So I usually stay away from coin flip trades. So going into this trade, you had to understand that you were going to be risking about 80% of whatever you put into this trade, no matter what direction you take. Okay, if you bought calls, if you bought puts, you're going to be risking about 80% of you'll be risking about 80% of whatever the money is that you put in. So I just took a small position, and I said to myself, if I bought 2 contracts, all right, so just a little over $4,000. And I said, if I lose 80% of it, it's not a big deal. But if I'm right and this thing drops to 175 or something and I can make 200-300%, it's worth it. Okay, it's worth it. So that was why I took the trade. But it's important that I wanted to talk to you guys that, this trade was more luck than it was anything else. Okay. I didn't know this was going to happen. I don't have a crystal ball. But going into the trade, you have to be okay understanding the risk on the trade. So you can't, I didn't go into this trade, okay, buying the same kind of position size that I normally would on a regular trade. That's why I took a very, very small position. If I lost 80% of the value on the position, it's not a big deal. And I would have just kept it moving. So I just felt like, the chance to make $8,000 to $12,000 and risk, or, and risk 3,500 or 3,000 or whatever it is. I feel like it was worth me just taking a shot at it, because I thought this stock was so overvalued that earnings would not be able to justify the valuation. So I really didn't see there being a lot more upside from here, except just a full-on, just all-out short squeeze. So their earnings were really good. They reported like 67 million in revenue when estimates were only around 53 million. So they blew out revenue expectations. They raised their full year revenue guidance. Okay, but they missed badly on EPS. They missed badly on earnings per share. They missed really bad on earnings per share, which I found that was kind of weird. But revenue and guidance was great. So the fact that this thing couldn't squeeze and make all-time highs after this catalyst, I don't know. I didn't really think what's another catalyst that can really trigger this short squeeze, and I really just didn't see it. So even if they reported good earnings and this thing popped, I didn't think it was going to have 2 or 3 days of follow through to the upside. I thought maybe it would pop and then pull in, settle in, and kind of have a gap and crap type day like it had a little while ago when it hit 200. That was on this day. So this day, when you had the gap and crap, this thing gapped up to brand new all-time highs and then pulled itself all the way in. I thought if we had an earnings beat, okay, I thought this thing maybe would have did something like this, gapped up and then crapped off. And that would have been like your blow off top. That's what I thought would have happened if this thing went the other way. So and then on the flip side, what I was thinking was if we cracked, okay, and earnings, created a huge sell-off, I thought the stock was so overvalued that it had 2 or 3 days of downside. Okay, so when I go out to the daily chart, I thought if this thing crapped, okay, I thought we had, maybe you get something like this, and I thought we had, multiple days of downside, and that's why I decided to take the put option end of this trade, and I got lucky with the offering because earnings didn't do it. The stock didn't move on earnings. That's what the stock did after they announced earnings. Up, down, up, down, up, down. But at the end of the day, it was right at where the stock closed. I would have lost money. I wouldn't have lost a ton of money, okay, because, the stock didn't really go against me. I would have just lost, the implied volatility would have dropped off. Extrinsic value would have dropped off. I would have lost that in the contract. Maybe I would have lost 30 or 40% on my money instead of like 80% on my money, but nonetheless, I still would have lost. And then it wasn't until they came out with the news of the offering that the stock finally took direction, and now I'll be in the money. Options don't trade after hours, guys. Just the stock does. So I can't trade the option right now, even if I wanted to. Have to wait and see what happens tomorrow morning. But again, this 192 area I think is crucial. If Beyond Meat gets below 192, like 190, 150, 192, if it gets below that, if this thing starts printing 190, I think get down to 189. I think we get down to 180, 178, and I think it happens relatively quickly. So again, I've got the 220 strike put options. I only bought 2 contracts. It's like $4,000. I bought them at. Sorry. Let me take to my trade announcements. Here you guys see swing trade. I bought Beyond Meat 220 strike 8.2 put option at $20.19, holding into earnings. Okay. You guys see, I made a little SPY trade. I lost money on a SPY put option earlier in the morning. I'll pull that up actually for you. Here's the SPY put option trade. After this big sell-off in the morning, okay, I just show you what I was doing. After this big sell-off in the morning, we had this little bounce back. Okay, and what I did was I said to myself, wow, we're finding resistance here. Right in here, see how we were finding resistance at the 38.2 Fibonacci level? So right there, I went ahead and I entered a SPY put option trade right there. Okay, I bought some SPY puts, the 301. Okay, here you guys can see the 301 strike, the same day expiration put options. I bought right there on this little bounce back. I thought it was like a real soft bounce back, and I thought we were going to roll back down and roll back over because I thought if we broke below this little support level that we had a lot of room to the downside. Okay, you can see here's your support level that I was looking at. Not a surprise that that's where we found support. And I thought if we rolled this back down, we got back down here into the low of the day. And if we broke that low of the day, that later in the afternoon, I thought we could have accelerated to the downside. So that's why I went ahead and I bought those put options in the SPY. But as you guys can see, obviously I got stopped out of it. The market ended up climbing and bouncing back from that big sell-off in the morning. So I took a loss on that trade. And then the only thing that I did after that was the Beyond Meat trade. All right. Was the Beyond Meat trade. it's probably stupid. That SPY trade was probably stupid on my part because, how much follow through and direction did I really think we were going to get with this is the biggest week of earnings for us. You also have the Fed rate hike decision. So it was stupid for me to think that we were going to get tremendous follow through one way or the other in either direction before all of these things happen. I mean, chances are people aren't going to take huge bets one way or the other until you get more earnings come out this week, because this is the biggest week for earnings, and you get the Fed rate decision. So after that, you'll start to see people take positions and take big bets one way or the other. So that was probably a stupid trade on my part in the morning. And then I just got lucky here with this Beyond Meat trade. It was a calculated risk reward trade, okay, but still, the catalyst on it was fundamentally was luck more than it was like technical analysis. So that's why sometimes it's better to be lucky than good. All right, that's it, guys. We'll see what happens tomorrow. Tomorrow's TGG Tuesday. The chat room is open free for everybody. Go to TrueTradingGroup.com, upper right-hand corner, click on TGG Tuesday, and then register. You will get a link that'll give you access to our chat room free for the whole day. You're going to want to see what goes on with this Beyond Meat tomorrow. So, guys, take advantage of the free day in chat. Sign up, come in, say what's up, and we'll see what's going on with this Beyond Meat trade tomorrow. All right, take care, guys. I'll see you in chat tomorrow.